Standard Chartered Bank has launched an intensive growth strategy to increase their banking in Africa. And some of the targets they're set to reach include increasing the number of banks from 16 to 20 by 2020, as well as increasing the number of banking outlets to 100 by 2015. And Alishia Seckam caught up with V Shankar, who is CEO of Standard Chartered EMEA, in Davos for more.
The targets are very real. We just announced it. In fact, a few months ago, we said we're going to be investing about $100 million into Africa and 100 new branches. We today have about 180. By 2015, that number should be closer to 250. We have 7,000 people on the continent, but and it's a business which is performing extremely well. Over the last 5 years, the top line has grown at 16% CAGR, and the bottom line by about 25%. So it's a pretty good business, contributes about 9% of the overall group profits. But what I'm most proud of, our African business, is two things. One is the way that we are connecting Africa to the rest of the world. If you look at some of the large investments which have come from outside of Africa, Standard Chartered has intermediated them. Equally, some of the investments which have gone from Africa into other parts, we're again intermediating them. And the second area where I'm most proud of is the African talent we have developed. The vast majority, if not all of our CEOs in Africa are Africans, and 80% of our business leaders in consumer and wholesale are Africans.
Shankar, it's very interesting that you highlight, this getting the African economy intertwined into the global economy as one of the strong suits. Earlier today, we had one of the guests highlight that this puts Africa at risk to remaining as resilient as it has over the past 10 decades. Your view on that? Over the past 10 years, rather, the past decade.
I think it's actually a good thing, because for Africa to grow, there are two elements of it. One is the way that Africa taps into the opportunity elsewhere in the world. So if you look at all the resources, which is about a quarter of Africa's GDP growth, a lot of it has gone into China and India and the rest of Asia. So I think it's very important to be a part of the global economy. But the other factor is the domestic economy in Africa is also growing. It's pretty large. But if you improve the infrastructure, that can become even bigger, because if you look at intra-Africa trade today, it's less than 15% of the total African trade. So I think there's a big opportunity there.
Big opportunity. You have, though, drawn quite a distinction between South African potential and African potential in terms of your growth strategy, having given up on pursuing retail banking in South Africa. Run us through the rationale there.
Look, there are four very well-positioned banks in South Africa, who between them, depending on the product, command 85 to 90% of the market share. We fundamentally believe in competing where we can win.
Can we extrapolate on that and then get your assessment of South Africa as a gateway to the rest of the continent? Are we losing that status?
I don't think so. It already is a gateway. And it definitely has among the best developed infrastructure, whether it's hard infrastructure or soft infrastructure or institutional infrastructure in Africa. I think South Africa is a natural home, but it's a competitive world, because to do business in Africa today, a lot of companies are establishing their headquarters in Dubai. And soon enough, if you want to establish a large business in West Africa, you could be looking at Lagos as well. So nothing is a given in this world. You've got to be paranoid.
Absolutely. Let's be a little bit critical of the cost of doing business in Africa. I mean, you've highlighted the potential and the potential for profit down the line, but it's no cheap endeavor either. What do you make of that? Because, I mean, you've got your expense base in Africa about $700 million, and that you expect to rise in line with the revenue that you reap. But are you critical of the cost of doing business in Africa, or is it simply the price you have to pay to tap into that African potential?
Moving away from Standard Chartered, our business is very well positioned there, both from a top line and a cost basis. But if you were to address the question in the broader context of Africa, yes, we heard some discussions this morning at one of the Africa sessions about labor rigidity and the cost of doing business. I think it is something definitely the policymakers should look at, because you don't want to get expensive before you become rich.